Well, welcome to this special broadcast. It's called the PF Muddle, and a muddle it is. On the 29th of February, the Finance Minister announced taxation of the EPF and the NPS, saying that 60% of the maturity corpus of your PF will be taxed unless you invest that money in an annuity. On the 1st of March, the Finance Ministry issued a clarification saying only the interest component of that 60% of maturity value will be taxed unless you invest in an annuity. The clarification also told us that the PPF will remain tax-free. There was also a change that was made, we were told, to encourage more Indians to manage their retirement corpuses better. Those earning less than 15,000 rupees a month will not be subject to this tax. Also, the voluntary provident fund will be subject to the tax. Now, if the person in question passes away during the course of that annuity that we're talking about, there will be no tax on the heirs and there's no tax on the annuity. Now, just to give you an example of what this means for your money, we have run some numbers for you to give you an idea of this tax that we're talking about. It's on your screen right now. Let's assume you are contributing 4,000 rupees a month, which means your employer has to also contribute 4,000 rupees over the course of your working life, which is on an average 30 years. Now, at the rate, which is the current going rate of 8.75%, this is what your total corpus will look like at the age of 58. When you retire, it will be close to 1.3 crore rupees. Now, 40% of that, 52 lakh rupees thereabouts, will not be taxed. You can take it out as a lump sum. The remaining 78 lakh rupees is that 60% component. Now, here's the catch. How much of that money is interest? Close to 60 lakh rupees. 61 lakh rupees is the interest component, which will be taxed. At a 30% tax bracket, we're talking about tax of close to 18 lakh rupees. The question we're asking today, is this fair? Is it fair for the government to tax the provident fund that goes compulsorily out of our bank accounts, out of our salaries every month, without giving us an option at all and telling us how we should use that money when we retire? If you have a question, our phone lines are open. We're going to be flashing a number at the bottom of your screen, so pick up the phone and call us. But I want to introduce the guests I have on the show this evening to answer this question. Dhirendra Kumar, the CEO of Value Research, and of course Nilesh Shah of Kotak Mutual Fund joins us right now. Gentlemen, thank you so much for joining us. I want to start, Dhirendra, I want to start with this, and I'm going to open this question to you. I personally think it's unfair because I'm not allowed to choose the PF. I'm not allowed to choose the rate of interest that I get on the PF. And now you're not going to allow me to choose how to use the money when I retire. It's completely unfair. Where do you stand on this taxation?
Yeah, not only that, I really don't have any issues about taxing anything which the government thinks is an income. But I think, this is morally and principally wrong on two counts. This is one of the longest term, capital asset which an individual builds, and this is not subject to indexation. So, if 30 years ago, if I saved 1,000 rupee on which I earned interest in nominal terms, it will be considered as 1,000 rupee even 30 years down the line, and 30 years down the line the worth of that will be substantially less. And this is actually a very well stated principle of taxation, that your long-term assets is adjusted for inflation. When you buy a house 10 years ago, if you bought a house 10 years ago and if you sell it today, you might sell it at a higher price, but it is adjusted for the inflation to calculate your gains. And I think that should be applied to this, because this is a real long-term asset for taxation. The other thing is that this is unnecessary imposition. Forcing investors to buy annuity, right, while the annuity market in India is not well developed, I think this is unnecessary. It is undesirable. It is unfair.
Yeah. And Dhirendra, this is my other problem. This is my other problem. In the 8 years that you and I have done a personal finance show together, never once have you recommended the annuity as a good investment. The annuity is a terrible investment. The return is fairly low. It locks you in. It doesn't give you any options. And, for those people who choose a variable return, you're dependent as a senior citizen on interest rates. It is a terrible, terrible option as an investment. Now, while the government has removed service tax from annuities, I wouldn't want to use it if I retired. And I think that most average investors should be given that choice.
Yes, absolutely. I think, most investors have to fend for themselves, and giving a simple periodic withdrawal plan within the taxable limit. So, if I have my accumulation of 1 crore rupee, and if I am taking, up to 5% of my accumulated assets annually, that becomes my annuity, and you know if that is provided for, I'll still be happier and comfortable. So one is that, you know, adjusting my, you know, all my accumulation as and treating it as a simple accumulation and treating it and making it subject to income tax is unfair. And the other critical thing is providing investors a choice, providing, you know, subscribers a choice what they want to do with their money. A lot of people, you know, and I think it requires some deliberation.
Let me bring in Nilesh Shah. He's Managing Director at Kotak AMC. Nilesh, are you for this sort of taxation? Now, here are the numbers. Let's look at the numbers again. This is according to the government. The government says there are 3.6 crore PF members right now. 3 crore members are below the 15,000 rupees a month bracket, which means that they will not come under this this particular tax. We're talking about the remaining 60 lakh rupees who are already paying a considerable amount of income tax out of their salaries. You've added some more to it. Nilesh, where do you stand on this?
From an intent point of view, government is in right direction. From an execution point of view, as Dhirendra mentioned, they have made lots of error. Where the intent is coming from? Today, India has a tax to GDP ratio which is equivalent to Ghana. Do you want India to be African nation, or do you want India to progress and become Southeast Asian nation? We all know, other than salaried class, taxation burden is not equally distributed. There are businessmen, there are companies, there are trusts, there are entities which are not paying fair share of income tax, fair share of their other taxes, which is reflected into our tax to GDP ratio at African level, sub-Saharan African level, rather than at Asian level. And we are not even talking about going to European or American level. So intent is to tax people who can afford to pay tax. So they are in right direction, but the execution, as Dhirendra mentioned, is erroneous.
Let me bring in Shailesh Haribhakti. And Shailesh Haribhakti was part of the team, the chairman of the team that designed the NPS. Mr. Haribhakti, I know you believe that this sort of taxation is good, but I have a basic argument, and I'm arguing here as a salaried individual myself. This sort of big brother treatment where the government says that, hey, listen, I don't think you are wise enough to invest for your retirement, so I'm going to force your hand on it. I don't think you're wise enough to choose that retirement investment, so I'm going to force your hand on it as well. And now on retirement, you're going to tell me that you don't think that at the age of 60 or 58 that I'm going to be wise enough to know how to manage my own money. I think that's unfair.
There is an issue with taxing 60% of the contribution if it is taken away completely. If we look at the finance minister's statements carefully, he has prefaced his remarks on the taxability of the contribution which is removed at the end of an EPFO or a NPS contribution by saying that we want to create a country where people have a lifelong ability to get a certain sum of money. If that is the intent, then let us try and make the 60% conversion to annuity mandatory and the annuity amount tax-free. That will remove the entire sting from this entire debate.
I'm going to go back to Dhirendra Kumar on this, on the point that Shailesh Haribhakti just made. And just as a clarification, Mr. Haribhakti, the clarification we received from the government says the annuity payout will in fact be completely tax-free. It also says that that's 60%, only the interest on that 60% will be taxed. And that tax can be avoided completely if we choose to invest in an annuity. Dhirendra, let's focus on the annuity, and that's my worry at this point. Stable return or a stable, payout from the annuity over a period of time, if my life expectancy at the age of 60 is another 15 years or it's another 20 years, inflation will leave me with close to nothing at the end of that life expectancy, wouldn't it?
Yes, if you retire at 60 and if you get a fixed annuity, this making annuity income tax-free can be very beneficial, because today the annuity returns could range, it will be about 6%, and post-tax it becomes 4%. So you actually need a much larger corpus to have meaningful income. of a predictable kind. And if so which actually brings me back to the basic point that there will be variety of investors. There will be investors who need income. There will be investors who will have some other alternative investment avenue, income source, and why they should be forced into this. And the other thing is that, okay, I agreed that this saving which is accumulated in a provident fund is sheltered from tax while I was making the investment, while the return was accruing to it. But such a long-term capital asset, why it should be looked upon as in absolute terms? Why it should not? Because that is the basic principle of any capital asset getting created. So I would say that it requires a big rethink. I don't think we should be looking at solving this problem in a hurry because this is a very large constituency. And what about those people who earn less than 15,000 rupees? That is also a problem because they are the people to whom the pension should be more, will be more relevant.
Yes.
So my, the whole exemption is actually making, the whole clarification is making a joke of the,
it's making no sense
mess
whatsoever.
We have created.
Yeah, because if the government's idea is that we can't be trusted to look after our own money, then it should be looking at a specific strata of that PF contributors who actually need that sort of guidance. And what they've done is the exact opposite. Nilesh, I want to ask you this: given what we've seen in history, do you think that if there are strong enough representations made to the government from average salaried people who are concerned at this point, we might see the government maybe reconsider?
My suspicion is that yes, as Dhirendra mentioned, there are certain errors in terms of taxing it at flat for 60% for corpus withdrawal. I mean, clearly annuity today is below market instrument. We need to make annuity more attractive by ensuring that they start delivering above inflation return. If annuities can deliver above inflation return, then certainly this whole problem of my annuity is actually eroding my wealth disappears. The second thing is related to capital indexation. As Dhirendra mentioned clearly, you can't be taxing on historical cost. You have to take into account the indexation due to inflation. The intent here is noble, that we want to create pensioners, we want to create a number of people who can draw regular income. And at the same time, we need to be cognizant of the fact that if we move country, a large portion of banking system to defined benefit scheme rather than defined contribution, and a lot of it has been not created through corpus, but it is basically current employees paying for previous retirees and hoping that the new employees will keep on paying for them, we should not end up creating a hole which will be very difficult to fill.
Mr. Shailesh Haribhakti, the EPFO account system is one of the most inefficient systems in this country. Anybody who has switched jobs in this country will tell you what a nightmare it is to get the EPFO to track your old account, to get the EPFO to transfer it to your new job. It is, I mean, they've not managed to modernize in any way whatsoever. Now the government adds this completely new layer where the same EPFO will have to track two separate accounts for all of us, because there is the pre-April 2016 and the post-April 2016 where the tax treatment is completely different. Now, we've just added another layer of complexity to a system that's unable to manage the complexity to begin with. This is a recipe for disaster.
There is huge scope for their IT systems and their per subscriber records to improve. And when I compare that with the care and the quality and the kind of investment that is being made by the NPS, I think that is a very significant distinction that we are trying to make, particularly because ours is a defined contribution kind of system, the NPS. And I fully agree with Nilesh that India needs to move as rapidly and as firmly towards a defined contribution regime as we can, because very soon the pension holes will become so significant that it will create a question mark as to whether for the rest of the life over which the payments have to be made, whether they will be possible to make.
You know, I know that Mr. Haribhakti is a very polite panelist and he never wants to say anything really harsh about anyone. But Dhirendra Kumar, I want to come to you for this. Now, I'm personally a member of the EPFO. A portion of my salary gets cut month on month and gets invested in the EPFO. It is a nightmare. I dread having to interact with the EPFO. I dread having to go down that system because they've just not modernized. I would have rather the Finance Ministry spend time and energy improving that system than making it more complicated. Dhirendra?
Yeah, I completely agree. But at the same time, you know, I would like to just inform you that, you know, I have kept track of the change of user interface at EPFO. It has changed substantially. You know, it has improved dramatically over the last few years, and a good amount of, you know, progress has been made on the quality of, you know, customer experience, you know, subscriber or user or, you know, member experience so far. Now you have access to everything in a reasonably online way. Your ability, now you also don't have to give, you know, bribe someone to take your money or take a loan or something like that. That apart, there could be this one-off thing that, you know, linking of account should be a very simple thing. It's a matter of clearing the glitch. So today I can say that, you know, at least the foundations are very well in place for EPFO to fix all the problems. But yes, it has taken very long for it to get a fix on its problem. And as you know, I understand that any system with legacy, it takes time to automate, and, you know, but once you have done it, I think you have, you know, one has reason to be very hopeful.
Nilesh, I'm going to come to you with this question, and this is I know this is a feeling that's being echoed across the country right now. Those 60 lakh salaried people who are already paying taxes, who already have compulsory PF deducted from their accounts, they're turning around and saying, why do you keep reaching into my pocket? There are so many other people. I mean, we're a country of 1 billion people. Why is it the same group of salaried people who are constantly being dipped into? Why can't we look at a wider tax net instead?
Undoubtedly, that is the real angst. I don't think so any one of us will mind paying proper and fair share of taxes. But when you see in and around you that because tax is deducted at source for salaried people, we are paying our fair share of tax. And because no tax is deducted at source for certain other categories of people like businessmen, traders, trusts and corporate entities, they are not paying their fair share of tax. I think it is important for government to utilize technology to widen the tax net. The government has already made effort whereby they have added 18 lakh income tax assessee using the data which they collect, like buying of mutual fund units, buying of cars, buying of real estate. Clearly there are areas in which black money is created within domestic economy. One is the area of real estate, the other is the area of gold. If we put specific focus, and it could be as simple as taking the jewelry, you know, jewelers recording of buying and selling of gold. If you can find people paying cash to buy gold, please check with their income tax record whether they have that kind of cash or not. This will allow you to, one, create fear of law in the non-salaried class, and hopefully they'll start complying and paying their fair share of taxes. If that happens, you probably won't require to tax salaried class as much as we are taxing it today.
Mr. Shailesh Haribhakti, while the government was fairly, aggressive when planning the NPS, and the NPS was really the first time that the Indian government came out of its shell where it says that PF or pure debt is the only way to keep the investor safe. They open their minds to using equity for the long term as well. So is there room here, considering all annuities are offered by life insurance companies that offer equity and debt and a blend of the two? Is there room here perhaps for the government to consider offering us equity after retirement as well if we really have to do this annuity thing?
I would imagine there is full room for that. And I think, again, I would echo what Nilesh has said, that as much flexibility has to be given to professional fund managers within the realm of safety of principle and making sure that the risk is manageable given the kind of instrument we are talking about. Within those constraints, I think enough flexibility should be given, and I think there is room to construct an annuity which would have a blended underlying asset.
Dhirendra Kumar, very quickly, I also want you to respond to the fact that both Nilesh and Shailesh Haribhakti agree that, we should have an option in the annuity stage of mixing equity and debt. And considering annuities are being managed by private companies, considering NPS are being managed by private companies now, and they're doing a very, very good job, it shouldn't be too hard for the government to ask for a blend that they can offer us on retirement.
Absolutely. I think, of course, it's the chicken and egg story. Till annuities, till there is a reasonable demand for annuity, I don't think the annuity, the choice for consumer will evolve. So until we have the, till it evolves, it will not become attractive. So I don't know what will break this chicken and egg cycle. But that apart, I would also like, the government to consider one option, that limiting the withdrawal. How about, 5% annual withdrawal? Because what we have seen in the developed world today is that driving investors to make a choice decided by, by the regulations has been counterproductive, because, this will not, and if consumers have a choice that, okay, here is their money, if they take it out, it will be taxable. But it is not taxable if I continue to remain invested and I have a withdrawal rate of 5%. So I have my pension, but I have my pension and I am at liberty to actually take my money out as and when needed. At the same time, the government ensures that I am not consuming it in a reckless way. So the policy goal is met. At the same time, the investment keeps working.
I want to give Nilesh Shah this response. Prajesh Verma has gotten in touch with us on Twitter, Nilesh, and he says full support to you and Mr. Haribhakti on taxing high-income agriculturists. Even 20% on income would be a fantastic way to go. There's also Lalit Advani who's gotten in touch on Twitter, and he asks you this question. Nilesh, he says, if I never withdraw and I keep extending my PF, which you're allowed to do, I think, for 5 years, then technically, and I use it instead for collateral on a loan, no withdrawal, no tax.
Absolutely.
But we'll be able to find out one more law to tax that. So let's not go into the loopholes around the law. Let's try to make the law which is workable.
Dhirendra? Don't look for loopholes in the system?
Yeah, I don't know, but at some point, somebody needs to access that money for it to be a valid collateral. And so at that point it will be taxable. So if it is being looked upon as a margin or as a collateral, then it will be valued at post-tax value.
That brings us to the end of the show. But remember, on ET Now, we're going to continue to answer your questions. So you can get in touch with us if you have questions on the same phone number or on Twitter. Gentlemen, thank you so much for staying with us longer than I had asked you to. You all each stayed longer than we had agreed. I really appreciate your time, and I'm sure our viewers appreciate as well.